Where is the pain? It's pre-construction. I'm getting a lot of calls saying, can you get me out of this? I can get you out of it if you're willing to take a 20% loss, lose your deposit, and then some.
Shoebox condos.
Shoebox condos, dog crate condos. They built a product that never had an end user. They had an end renter, but not an end user owner that wanted to live in it. And that's where the issue is today, right? Because if investors are not going to come back and buy these products, who's going to buy them? We can stage it, we can paint it, we can make it look amazing. The only thing that matters in today's market is, are you the best priced available option? And the comparable that sold 3 months ago does not matter. So my job, as well as your job, basically delivering bad news to people.
The equity play is now kind of gone. The cash flow kind of really isn't there either. So they're just trying to get out.
A lot of them are.
The slinky is going down the steps. It's going to hit the next step. We just don't know how steep that step is going to be. How do you catch a slinky? We have to go and get under it and catch the slinky before it hits the next step. What we think market value could be, and then a buyer's perspective of looking for a deal,
right,
even on that amount, and trying to get under that and get it sold and closed before the next iteration of numbers comes out and proves that number to be even lower.
If you're a buyer right now, would you rather pay asking price or get money off the asking price?
I'm looking for blood in the streets.
Exactly. If I'm a seller hoping that Bank of Canada is gonna make my home sell, no, your price is gonna make your home sell. A few more cuts is not gonna solve things overnight.
Welcome to Supply and Demand with Adam Nadler. This is a podcast dedicated to the real estate market in Canada, available now on YouTube, Apple Music, and Spotify.
All right, Tom Storey, you are like the authority on condos in the downtown market, in my mind anyways. And I'm really happy that you took the time, came on down here.
Of course.
And lots to talk about, but you have kind of this granular view of what's happening in the market because you're actually dealing in the downtown market with condos specifically.
Yeah.
Correct me if I'm wrong. You're like selling more condos than anybody else in the downtown market, basically.
There's two other people we hover with, but yeah, the last 2 years, transaction volume, we've done more than anybody for resale condos.
Like, how many condos do you sell on average?
Just in the downtown core, around 50 a year.
That's insane.
Yeah, resale.
Wow.
Yeah.
So you're like selling one a week.
Yeah, I mean, we'll have to see what this year ends out at, because it's not quite the absorption is not there like it used to be.
Right.
But yeah, very, very involved in the condo market and the housing market. We sell a lot of homes too, but like, we have market share in condos.
Now, another thing that's really cool is you kind of have a bird's eye view on things. You have a really big podcast on YouTube for real estate, which everybody should check it out. And your channel on YouTube is also like pretty sizable for real estate in Canada right now. So like, you have kind of this bird's eye view as well as a super granular kind of boots on the ground view. So for everybody that's wondering, because it's the talk of the town with the condo market downtown, kind of, shit hitting the fan a little bit, tell us what's actually going on.
So I think it needs to be put into two different categories. So like, where is like the pain and like horror stories happening? It's pre-construction. I at least feel validated in the fact, and I have many receipts online, and I've done full videos on this, where I told people not to buy pre-construction going back to like 2019. I thought the prices no longer made sense. And this was before the interest rates went up and everything else happened. So like, that side of the market, I fully understand that it's not good. But I'm not involved in it. I never sold it. I'm getting a lot of calls saying, can you get me out of this? As I'm sure you're getting as well.
Yeah.
And for most people, it's like, I can get you out of it if you're willing to take a 20% loss, lose your deposit, and then some. But if you can close, find a way to close. So I think there's that section of the market, but I'm not involved in that section of the market. And then there's the resale condos. There's what's available now, and there's what's actually happening that you can go physically see and touch. And that section of the market, you'd have to break it down for property type, but in terms of like condo apartment versus condo townhouse, and condo apartment is where it's not very good. And then once you get to condo apartment, you break it down even further and you go bachelors, 1 beds, 1+10s, 2 beds, 2+10s. And you got to kind of like go through the whole section there and then figure out the months of inventory. And where it's the worst right now, and this isn't like breaking news, junior one beds and bachelor units have about 10.8 months of inventory as of us recording this.
Right, shoebox condo.
Shoebox condos, whatever you want to call them. Ron Butler's made a dog crate condos, a very famous term. And I get it, right? It's like we just did a podcast on this too, and it's like, yeah, they built a product that never had an end user. They had an end renter, but not an end user owner that wanted to live in it. And that's where the issue is today, right? Because if investors are not going to come back and buy these products, who's going to buy them? So they're sitting at over 10 months of inventory. So in terms of like looking down on it but being active in it, if someone reaches out to me and says, hey, I have a junior one bed I want to sell and it's tenanted, which makes it even harder.
Yeah.
It's like, all right, there's 200 for sale. There's 10%, if they're lucky, are going to sell this month in the next 30 days. Here's where you need to be price-wise, because we can stage it, we can paint it, we can make it look amazing. The only thing that matters in today's market is, are you the best priced available option? And the comparable that sold 3 months ago does not matter. Like it's literally the past. So my job, as well as your job and most people that deal in this market right now, is basically delivering bad news to people. And even when you sell in today's market, and maybe this is just my own experience, but when you get the accepted offer, sellers are kind of like, well, if that's my best option, I'll take it. But they're not like happy. They're like content.
No, they feel like they gave it away.
That's it. And that's actually interesting. That is so common. That phrase comes up in my conversations with sellers like on a weekly basis. Well, I don't want to give it away. Everyone says, well, I don't want to give it away. And it's like, what you believe give it away is probably the price you actually need to be at to be in the small percentage that is selling every month. But to kind of go through the what's actually happening for condos, junior one beds are in a bad spot, and they will continue to be in a bad spot for a long period of time. That's not changing anytime soon.
What do you think, like 2 years?
At least. I think for that specific property type, if you're sitting at 10 months of inventory, you will see downward pressure on price. It's not like a theory, it's like a fact. Like we know how the market works. Now they're starting at the lowest price, but still price per square foot is kind of up there when you're looking at those units. So I think that's going to take a long time. Directly beside them is your one beds. Your one beds, no parking, 500 to 600 square feet. They have 9.5 months of inventory. So very similar percentages of what's selling every month. And it's interesting because, when 10% are selling every month, you might think like that's really bad. But just to put things in perspective, like 3 months of inventory, we would probably agree is like a pretty good market. Like things are moving.
Yeah.
When you have 3 months of inventory, only 33% of listings are selling every month. So just like, it's not like 10 to 100. It's kind of like even 2 months of inventory, which is like a hot seller's market. That means only 50% are selling every month. So just to kind of like give context to it, one beds are in a very similar space. And then where it kind of shifts and where we're finding the most success in today's market, still very much a buyer's market, is your 2-bed, 2+10, if we're talking specifically about condos. That's where things are happening. You still need to be priced right. You still need to be positioned at where you have to be in the market. But their inventory levels are in like the high 6s, low 7s, where 13 to 15% of the units are going to sell every month.
How much have you seen prices drop off on a price per square foot basis? Because that seems to be, where you really see the big difference percentage-wise.
I guess like from what date till now?
Well, I mean, to make things fun,
Yeah.
from the peak.
During the peak, we were selling most stuff at 11 to 1,200 bucks a square foot.
That's insane.
I remember very vividly, we sold one. It was a nicer, newer building, but it was a 1+10. It was 600 and something square feet, had parking. Like, it was a good layout. It was actually tenanted when I sold it too. Just showed you that it didn't matter in that crazy market. Sold that for $850. I remember, that is not going to become $850 again for like that could be 10 years. It's not gonna come for a long time. And what's interesting with the condo market, specifically for Toronto, is if you go back to the day before the pandemic and you just drew a line across the graph and you've seen the roller coaster the condo prices have been on, they're back to where they started. In some cases, they're back to mid 2019. In some cases, they're back to late 2018 prices. So from $1,200 a square foot for a resale condo downtown, I don't know if I've sold anything this year over $1,000 a square foot. And like, we're active in the market. So I'd say most condos that are good buildings, you'd recommend people would buy in that are owner occupied, have a parking spot. And so I'm putting parking into this price per square foot. 900 is like what most is trading at.
Do you see that going down further?
It depends. So like, yes, for the junior one beds and the one beds, because we're sitting at an inventory level. I think with the two beds, you'll see a little bit of pressure on price, but I think they're kind of going to hover here. I think it's going to be the smaller units that continue to see the decreases in price. And you could look at that in several different ways. It's actually interesting. I had a call with a buyer literally as I was driving here today. And she's like, I want to buy a two bed. My budget's 800,000 to $1 million. I'm like, okay, well,
Very healthy.
you got options, like tons of options. Lakeview is what I want. And it was interesting what she said to me on the phone. She's like, I watch your videos. I get it. The market's crashing, but I'm an end user. I'm a first-time home buyer. I've been saving up for years. I'm done paying rent and I'm going to live here for 10 years. And it was just like, all you hear online is the negativity. And it was just a very, like, I wasn't expecting her to say this. It kind of like caught me off guard. She's like, because I was trying to warn her. I was like, just so you know, like, if you're buying a condo in today's market for the next 2 years, I don't want you to expect any upward pressure on pricing. Like, we're trying to be very upfront with all of our condo buyers right now. Only buy this if you're going to hold it for minimum 5 years. And she's like, yeah, I want it. I'm going to do it. So we're starting to slowly, and like, buyers are more educated than they've ever been before. And whether it's because they're watching podcasts like this, they're just hawking, House Sigma every single day and like going through all the sales and all the stuff.
And you know what? Good for them. It's a fantastic platform. Like, I remember back in 2017, the big fight was on with the Toronto real estate board over sold data. And I remember going to these meetings and the brokerage would hold their spring kickoff and everyone would be talking about it. And I always remember thinking to myself, why is everyone freaking out about this? Like, an informed consumer is a better consumer. Why would
Making their job easier, honestly.
yeah, why would we gatekeep this information? Allow the information to be better out there, and so that, we can actually have better informed consumers. I didn't understand it, but now we have these platforms like, Condos.ca, House Sigma, and they are providing fantastic information.
The user experience is so far superior to what we can offer. That is like a realtor, like not let's say like not a brokerage platform, but like an overall industry platform. We're too far behind. And once you get daily users, for them to switch to something else,
They won't do it.
it's not going to happen.
Mhm.
So credit to these companies. And the only thing I'll say about these companies is that like they've done such a great job that the people using it don't even know that they're not just a search portal.
Right.
Like, I remember I spoke with someone that bought a condo a few years ago. They're like, oh yeah, I bought it on condos.ca. I'm like, oh, condos.ca is just like a listing portal. Like, they're a brokerage.
Mhm.
Like, no, I bought it on condos.ca. Like, they had no clue that it was just listed by like a Royal LePage agent, a condos.ca agent, or property.ca agent helped them buy it. So that's the only thing I'd say is like, understand that amazing business model. Wish I thought of it.
But you don't see them selling a lot. Like, I will say,
They do represent buyers though.
yeah.
Buyers a lot. Not on the listing side, I agree with you.
Yeah, like, I don't see any House Sigma signs around.
No, but they're breaking the buyers that buy the houses.
Mm,
That's what, at least like in my market, that's what I can see.
really? Because in my market, we don't really it's a different market, though. It's amazing how this all kind of it's all intertwined,
Yeah.
but somehow yet separate. And so I just to, I guess, feed the doom porn fanatics on YouTube. How do you see this spilling out into the rest of the market in terms of the condo market in particular, which is definitely the hardest hit? It's definitely where the most pain is being felt right now, other than the assignment market, which is a whole nother story. And I'm actually having Nima on next week to talk about that because it's just so crazy what's happening there. How do you see the condo market affecting the greater market as a whole?
So a very high percentage of condos are owned by investors, right? So for the most part,
What is
Even
it, like 60,
I would
70%?
I would argue 7. Like, if you look at active condo listings, only about 30% of condos for sale in the market are owner occupied, meaning that the owner that actually owns it is living there when they're trying to sell it. So that probably gives you a pretty good idea. The other, then you've got tenanted and you've got vacant, right? So I'd say it's probably at least 60%.
And these investors, I mean, frankly, there hasn't been a cash flow, positive investment in the Toronto condo market for a long time. It's all been an equity play. And now,
No, it's 20% down.
right.
Yeah.
So the equity play is now kind of gone. The cash flow kind of really isn't there either. So they're just trying to get out.
A lot of them are, because even if, they had a low interest rate and they're renewing now, it's 4 instead of 2. It's not 6. Like, it definitely got a lot better. But I think it's like, so if you look at who owns them, it's like, well, okay, first of all, it's like, what percentage is owned by investors, which we already know is a large percentage. Of those investors, how many people bought these pre-2018?
Mm.
Where, yeah, they might not have made money, but they're not losing a ton of money. It's like it went up and down and it's back to where it started. Versus what percentage of total condos available for sale, at least, have been bought in the last 5 years? I don't know. Be interesting if, like, we could figure out that number. That would tell me more of, like, kind of what's happening here.
Hmm.
But if I own a house and I own 2 condo investment properties and I live in my house and the condos no longer make sense, is it gonna really impact anything to do with my house? No, I'm just gonna sell one of those condos.
Mhm.
Like, they're gonna be the first to hit the market. Or if I lose my job and I own my house and 2 properties, the 2 I'm gonna sell first to fund things if I need money coming in are gonna be the 2 investment properties, right? Like, you're gonna do everything possible before you have to sell your house. So
Mm.
my outlook on freehold in the city, 416 area code, city of Toronto, is still very bullish.
Really?
Freehold, yeah, under $2 million, freehold, city of Toronto. I can see it in my own clientele. Everybody wants that. They want to live in. There's like 10 neighborhoods in Toronto that they all want to move to. They're all having their second kid or have their first kid. They've lived downtown, but they don't want to be too far from downtown. So if they go east, they go to Leslieville, Danforth, East York, Beaches, right? Uh, Other areas, if they want to keep prices a little bit down. If they go west, they go to Roncy, they go to the Junction, right? If they go north, they go North Toronto, Mount Pleasant, Eglinton, like all these really good Leaside. There's like, I could name these 10 areas that they all want to go to. The homes sub $2 million in those areas that are freehold homes, even in this really bad market that we're in, are selling.
So what do you say to sellers who are really struggling right now? Like, how do you have those conversations? Those are really difficult conversations to have.
So, like, I'm a numbers person and I've never had much emotion, which is maybe good and bad at the same time.
No, look, I'm the same way.
So I try to, so first you gotta, like, it all goes back to personality type of the person you're talking to, right? Like, you kind of have to understand how you need to approach this based on how you believe they are going to respond.
Right.
Right? So, like, we know how to kind of figure out what people are, but I'd say that's like a really important metric.
Right.
And then for me, there's 3 ways to understand value in today's market. The first way, and we would use benchmark price, is I can make you a custom graph, and we do this for every listing presentation. Here's the day you bought it. Here's what the market's done. Not your property, but just the market.
Right.
And it shows them the craziness. It shows them the down. It shows them what's happened. Let's say it's a 5-10 year period. So you say you bought it here. Now we're here. And let's look at percentage change. And we're using benchmark price. So it's not using average. So there's no outliers in there.
Yeah, I do the same thing.
And it's amazing, right? So I print it out and I show them. And so, like, that gives you a general idea, but doesn't tell the full story. But it's a good starting point. Then we would move and go, okay, well, this is kind of the obvious conversation is, well, what's sold recently? What is a recent sale that has happened? That would be like our second step here. Let's take a look through that. Let's see how comparable they were to yours. And we can go through, the checklist of things that we do to make sure that they line up as a good comparable. But those 2 things are literally the past. Like, that's what's happened, but it's in the past. So in my opinion, the only thing that matters in today's market is where you positioned for the current group of buyers based on what else is for sale. So what we would actually do is, whether it's meeting with a potential seller or a seller that's on the market now that's not getting showings or not getting offers, it's like, okay, well, at this point in time, my opinion doesn't matter because the current group of buyers have told you with their actions that they're not interested in your property at this price, right?
Hmm.
And in today's market, in a declining market, as you know, as long as like the house doesn't show like crap and you got good photos and like it's price. 95% of marketing in today's market is price.
Yeah, it's your biggest and most valuable
That
marketing tool.
and the difference between the realtors that are going to waste your time and the ones that are going to help you get it sold is the ones that can actually tell you where you need to be price wise. So it's a weird conversation because like I think you should hire me now because I'm gonna sell your home for less. It's like a very totally flipped to what we used to say in the hot market. Because it's not that it's I'm gonna sell it for less, but my price is gonna be lower because I'm gonna tell you where you need to be to actually transact.
It's so funny that you're really reminding me of something that Bill was telling me
Yeah.
the other day. Have you ever heard Bill Parnaby, for everybody listening? Have you ever heard him say the slinky thing? The whole slinky.
Oh, like going down the stairs?
So
Yeah.
he basically was telling me that this is how he describes it to people, and it's, Bill has a euphemism for everything. I
Yep.
mean, it's like the guy comes up with a pastoral euphemism that has something to do with a farm or God knows what for literally every situation, which is so dad-like that
Mhm.
it just makes everything make sense all the time. He's really good at that. And what he was telling one of his sellers is that, the slinky is going down the steps
Mhm.
and it's going to hit the next step. We just don't know how steep that step is going to be. Now, how do you catch a slinky? You don't chase it from the top.
Mhm.
We have to go and get under it and catch the slinky before it hits the next step. And that's kind of, I think, what you're saying here is like there's what we think market value could be, and then a buyer's perspective of looking for a deal
Right.
even on that amount and trying to get under that and get it sold and closed before the next iteration of numbers comes out and proves that number to be even lower.
In a decreasing market, it doesn't matter what the comparable sold for. It's literally history. You have to get ahead of it if you want to be if you know the percentage of homes that are selling. So like if we step back here and we go, okay, how do you have the conversation with the seller? They're not good conversations. I don't enjoy them. But it's like the property that you have based on the area you are and what it is, this percentage of homes like yours are selling every month. So we got to know that off the bat. Let's say it's 25%, 4 months of inventory. That's like a pretty good overall market. Of the ones that are selling, what are they getting based on their last asking price? Not their initial price, because when you see list price versus sale price in the stats, it's last asking price.
Mhm.
Okay, so let's say the number's 97%. Things are selling
So
under
you have a
87.
3% margin of error on price.
Yeah. If you're listed correct, if you're in the group that actually sells,
Mm.
right? It only matters if you actually sell. So if we know both of those things and we also know, let's flip it for a second. Let's pretend we're a buyer. If you're a buyer right now, would you in today's market with all the noise going on out there, would you rather pay asking price or get money off the asking price?
I'm looking for blood in the streets.
Exactly. So a buyer believes, which is not always true. It's true 80% of the time, but they believe that money off the asking price means deal, right? I beat them in negotiation. I got them down from their asking price. I won this negotiation. Everyone wants to feel like they win in this negotiation.
But the problem is then that's what sellers think, and then they overprice because they're like, "Well, I gotta lace up my boxing gloves then."
Well, yeah, but there's a delta, right? It's like if you're getting no offers, you're priced wrong. It is what it is. Or, well, you're priced wrong for today's market. If you don't like where the prices are going, get off the market. Just sitting there is not going to help, right? Like
Mhm,
things aren't going to magically flip and you're going to get a better price tomorrow. Like it's not going to happen in the short term here.
mhm.
It's going to take some time. So if you know buyers want money off asking, yeah, like I'm not talking like 100 grand, right? I'm talking like a reasonable amount.
Right.
You got to get to where you realistically need to be, and it's probably lower than the last sale in a declining market. So like step one would be, are you the best positioned? What is actively for sale like yours? Are you currently the best priced option? If there's 10 for sale, are you number one on the search? And then so that's step one. Okay, now you're going to get showings. You might get offers because for the current crop of buyers, you're the best available option.
By the way, there's actually a really good algorithm for it on House Sigma where you'll actually see kind of popularity, like like if it's
Right.
popular with buyers or not.
Right.
And then you'll see the meter and if
Okay.
it's like hot or not.
Yeah.
And they actually do kind of show this. Anyways, it's just you just made me think of it, but yeah.
But that's it, right? So it's like you got to be the best available option, and then but even if you're the best option, because I'm finding the biggest objection we're finding with sellers to bringing the price down is like, first of all, will it even make a difference?
Right.
And the truth is, I don't know. But
It's a valid question.
it's a very valid question. But what I do know is where we're at today is not working. And what like the tools that I currently have available for your property, what's left for me, I'm like the Bank of Canada at this point, all I can do is decrease.
Okay. Let's talk
I have
about that.
one tool, and once you've covered the marketing and the photos and the presentation, which I know good realtors all do,
Yes.
we have one tool left.
Price.
Price. It's always been price. But in a upward trending market, it's easy because you could just price low and set an offer date and the market tells you price. In a downward trending market, you got to wait for it or get ahead of it. So sort of cut you off.
So no, you just brought up a really good point. You on your podcast with Steve Crash, which by the way, if you guys haven't, if you like this content, you're definitely gonna like their content. What's your podcast called?
Tom Story Show.
Tom Story Show. Check it out on YouTube. They're fantastic. They're also on all the other streaming platforms. Now you had the chief economist for BMO on your podcast, and everybody's, I guess, showing up to these Bank of Canada announcements, kind of like Oliver Twist, like holding a bowl and just going to Tip McClem saying like, please, can we have some more, like a little bit of a drop? And frankly, it doesn't even seem to make a difference because everybody's looking at fixed rates and the bond market is completely like nosedived. So what did he tell you in terms of like what people should be expecting?
He said that he believes by the end of 2025, the overnight rate from the Bank of Canada will be at 2%.
No way.
Yeah. I would say BMO's maybe one of the more aggressive banks on their projections. I think TD's 2.25. A few of the others are 2.5 that still expect, depending on when this podcast comes out, another cut. So they think there's 3 more 25-point cuts that are going to happen.
That's aggressive. How are they going to be able to manage that with the delta between that and the Fed?
It's a good question. I don't know.
Because the Fed,
I know.
it looks like they're not
I know
dropping.
they're holding. They're really kind of holding there. Trump's threatening to fire him, which I don't think he can.
No, he can't. But like the idea behind this big beautiful bill and the amount of spending that they're doing is only going to make the bond market and interest rates just go up, right? And that's actually giving the Fed more authority to raise interest rates than it is to lower it. And we can't stay at a huge delta with them because then our dollar is going to essentially crash.
I mean, if you look at rates right now, though, the fixed and the variable are almost the same. Fixed is a little lower than the variable right now, like whatever prime minus you're getting for the variable product, right?
Right.
That's not normal. That's not. Like normally the variable rate is lower. The inverted curve, yield curve that we had was when the variable was way higher for a period of time. But typically, most of my career at least, the variable is at least 50%, not 50%, but like 50 points lower than, like the fix is 4, the variable's 3.5. Well, it used to be a full percentage at certain points in time.
And
right?
you know what? Demand for that product, that financial product was higher. Like Canadians typically always preferred variable.
Yeah, I did. I still will stand by that even though I got smacked in the face for the last 2.5 years on my variable rate, I still think my 10 years of having a variable rate, I'm ahead of 10 years of having a fixed rate. I'll stand by that. Because the 8 years before the 2 years of really bad stuff was like my rates were silly low.
So what are you seeing your clients taking right now?
You know what? I'm actually not. I don't know. I don't ask them. That's between them and the mortgage broker. I kind of stay out of that conversation. I would assume most people are taking fixed. Because the fixed rate, the lady I spoke to this morning said she had 2 pre-approvals in place, one from RBC, one from Scotia. They were both under 4%. And she was putting more than 20% down. So it was an uninsured mortgage. I'm like, whoa, okay. Not bad.
That's a lot of cash.
Yeah.
That's good.
Yeah. So that's interesting. So I would think most people are probably taking fixed, even though probably when everyone's taking fixed, you should take the variable because probably it ends up a little bit lower when the dust settles here. It's like if people had a variable previously, what they've just gone through, like
I think that the thing is,
they're not going to go back to it.
like, consumers are getting excited at the news of rate cuts, but then they go to actually apply for a mortgage or look at mortgage rates, and they're like, "Whoa, what the hell? Yeah, what is this?" Right? And they're a little bit surprised by it. I guess there's kind of a disconnect between what people understand the overnight rate to be and how the bond market actually affects fixed rates. And can you explain that a little bit? Because I feel like a lot of people just don't know that.
So the overnight rate is the rate in which the Bank of Canada lends money to the banks.
Yes.
And then the prime rate is supposed to be, I guess, technically the rate in which the bank lends money to the consumers.
Mhm.
But then it's prime minus typically for the variable product, but for line of credits, it's prime plus. So that's what actually matters. And then, yeah, as you said, when Bank of Canada makes any announcement, there's indirect correlations for sure, but there's no direct line saying Bank of Canada made an announcement, the fixed rate's going to change. It's just like, that's not how it works. It's the 5-year government bond yield, and that is what's impacting the fixed rate. And that's what I think is interesting is like, if you have your home on the market today, you're waiting for the next rate announcement and thinking like, if they cut, could it be good? Could it help me? It's like,
I mean, it must help consumer confidence at some level.
well, you'd think, but they've cut 7 times. Well, not in a row because they paused on the last one, but they cut 7 times in a row. Does it? That didn't do anything.
No.
So even if they cut 3 more times this
In
year,
fact, it actually made some people panic because they're like, well, why are they being so aggressive?
Well,
It must be in a terrible place.
and that's it. So when they're going up really fast or going down really fast, if I'm a buyer, I get it. I'm probably like, okay, let's see when they pause. And then they pause for a few in a row, and then I have certainty. So perhaps it's that as well. It's like, well, let's see how much lower they go before I actually jump in. But like, we're so involved in this, and anyone that's watching this podcast, you guys probably get it, but we're still a very small percentage of like Canadians, right? Like when the Bank of Canada cuts rate, I would bet less than half of Canada actually understands what that means.
Hmm.
And not because they don't get it or they're stupid. No, they're not following it along. They're not educated on this specific thing because it hasn't meant anything to them until it does mean something to them,
Right.
right? So I think that's the thing. I think if I'm a seller hoping that Bank of Canada is gonna make my home sell, no, your price is gonna make your home sell.
Right.
A few more cuts is not gonna solve things overnight.
And what do you think about the buyer's mentality of that? Because ultimately, at the end of the day, buyers are looking at their monthly payments,
Yep.
right? Like they're like that's the one thing that I've kind of never understood because I'm a lot more conservative in my just personal finances.
Mhm.
But people have been so obsessed with just their monthly payments, and they're willing to take on enormous amounts of debt
Mhm.
as long as you can bring that monthly down. That's all they care about. And now they're, kind of feeling the pain of that. But isn't it now? Do you think people have learned their lesson or no?
What? No, I don't honestly know. I think it will continue to happen. We have access to capital here in Canada. And I would assume that the thought process, and I probably had the same thought process, or like I was very proudly in over $1 million of mortgage debt in my 20s, and it made me a ton of money. Like the market was just good. I'm not, it's not because I'm smart. It's just because like I was leveraged and it worked really, really well. And I think the thought process, like, yeah, I'm taking out an $800,000 mortgage, but it's a mortgage. I can sell the house and get rid of it. It's different than like student debt and every payment I make, it's not just interest. At least a percentage of it's going to principal, less today than it used to be. I think if you allow people, and when you go to the bank and you get approved and they say to you, because these days it's roughly 4 to 4.5 times household income is like, assuming you don't have massive car payments or other debt otherwhere.
Which they always do. But
Which,
yeah.
yeah. But let's just make for this example, then it's like, this is the mortgage we're willing to give you, plus the money that you have for your down payment, and those combined is your maximum purchase price. But most buyers just think that's what I'm gonna buy. This is what I've been told I can afford, And yes, it's an expensive market, so I have to go to my max to get anything that I like at all. Even if I don't love it, I like, kind of like it. So they're seeing this as like, I'm just gonna get there instead of thinking like that's your cap. It's like, well, most people are going to their cap.
I know, and I see it here too. You know what's interesting about your market for condos and here in York region where I primarily operate is we have a lot more end users,
Mhm.
a lot more just owners that are owning condos living in them than we do investors. But the thing is that it's really spilled over into affecting our freehold market because a lot of people want to upsize. A lot of people want to
Right.
get out of them, and when they can't, and the condo market becomes illiquid, which it has largely here as well. Well, where are those buyers coming from? No
Right.
one's moving into a $1.5 million house if they couldn't pull the equity and get rid of their condo.
The property ladder has a broken step,
Yeah.
essentially. I mean, we're experiencing the same thing. I probably have 5 condos for sale right now
Hmm.
with people that would love to sell them to go buy a house that are ready. There's 10 transactions ready to happen, but selling the condo that's a one bed even if you price it right, like we've talked about so far today, it takes time. So I have 5 people that are ready to go buy homes right now, but they need the condo to sell first.
Is it getting to the point, or do you foresee it getting to the point where you're gonna have to like turn down business if you feel like people are not motivated enough? Because like realistically, you have if
Yeah.
you have a dozen listings lined up, you're just pouring money into the marketing of these places. It can be thousands of dollars to put these places up for sale,
Yeah.
and then the renewal costs on things like staging each month. Like, look, we're doing great, but we're not a bank.
I got a hot take on staging if you want it.
Let's hear it.
I think it was given too much credit in the hot market.
Ooh, that's a big statement. All right, let's hear what you got, Tom.
So, we have many case studies that I'm showing our sellers now because even if you stage your one-bedroom condo beautifully and take amazing photos, it does not sell if it's not the best priced option. Like, that's the market that we're in. So as things were transitioning and changing, we had quite a few condos last year that we had professionally staged. They looked amazing. And then the 30-day renewal came up, and I asked my son, I'm like, what do you want to do? And they're like, well, it hasn't sold, so just take the furniture out. We would take the furniture out, we would reduce the price, and then it would sell to a buyer that saw it when it was vacant. So it's like I have enough actual data to show you now that like price is the number one. Staging doesn't hurt, but it's not going to be magically why you get the same as one that sold 3 months ago.
Do you think that's also just a condo thing because so many of the layouts are so similar that it's kind of like you
Maybe.
walk into one, you walk into another, they're not that different. In fact, like for me, if I'm even showing a buyer condos, I'll limit the showings to like 5
Right.
per outing because otherwise they just get
How do you pick those 5?
What do you mean?
How do you pick the 5 you're going to see?
So if I see a bunch that they like or even a couple that they like that are in the same building, I'll try to localize it and then keep them in that building so that they can get a feel for it or in the complex and go from the cheapest condo unit to the most expensive condo unit so they really get a feel.
You're showing them in that order too.
Yeah, so that they can really feel the ladder of like what does your money buy you?
Mhm.
And then that way they also kind of get a feel for uh the different layouts because they can be so similar.
Yeah, maybe my staging take is more on condos. Like I have homes that are staged right now for sale, and I think for the most part it's usually really worth it.
Yeah, like for homes I feel like it's
Maybe,
worth it.
but for condos, it's not the reason you sell anymore.
Mhm.
Um, and we've had many condos this year that are vacant, and they're like, "Do you want to?" I'm like, "Do you want to stage it?" They're like, "Does it make a difference?" I'm like, no, price makes a difference. So
How do you feel about virtual staging then?
I like it.
Yeah, I like it
I
too.
like it.
I think it's actually gotten pretty damn
It's
good.
gotten pretty good, and that's what I was gonna get to. We've sold so many condos this year, mostly 2 beds because they're the ones selling, that were vacant, and we virtually staged it. And, like, it's not all virtually staged pictures, it's the empty photo and then the virtually staged. Yeah,
Yes,
that's
yeah, yeah.
clearly, like, it's not tricking them, it's, like,
No,
showing them.
Well, I think they've even changed the rules. Like, I think you have to do
You
it.
have to say that now,
Yeah.
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 And you can't put, like, if there's, like, a park a kilometer away, you can't put a picture of the park in the listing anymore because that's not the exact property, right?
Mhm.
It can only be what you can see from that actual unit.
It's really interesting because the actual kind of AI seeping into our industry is getting pretty good, and to be able to search now for places that are renovated to some level or some standard
Yeah.
is becoming a very, more foreseeable kind of option or tool in the future that I think we'll probably end up having, like, pretty quickly. It's so I like that. I like the idea of being able to show people what it is
Mhm.
without duping them,
Yep.
without fooling them, because there's so many agents that do that. It drives me nuts.
I think too, there's like, so there's the virtual staging that you can pay a company to do for you. It's, I don't know, what, $50 a photo, or I don't know what
Yeah,
it
yeah.
ends up being.
Yeah, yeah, it's about that.
But they're taking the original photo and adding the furniture to it. So it's still a representation of the property. They're not, the problem that I've seen is that ChatGPT has gotten very good, and agents will now starting to think, I'm going to save the money on virtual staging. I'm just going to throw this photo in ChatGPT. I'm going to ask it to stage it because it will. And at first look, you're like, oh my God, it did that in 2 seconds. It looks great. But it's changing. It's literally changing the color of the floor. It's smoothing out. It's changed. Like
No,
it's
no.
changing the whole thing. But like at one quick look, you're like, oh, that's great.
So
It's changing all these little details.
that's dangerous.
We tested it on one. It just removed the dishwasher, and it's like but you wouldn't have noticed if you didn't like look at all the different angles of it. So I think that's going to be the issue is people get lazy and cheap, and they're like, and maybe it gets good enough, you know, a week from now that it can do this. But as of right now, it's not going to cut it.
There's one thing that also happens, I think, that's been consistently misleading buyers in this market, in all markets right across the GTA, which is the whole offer night thing. And it doesn't matter, it seems, how many times I tell people that if they see a price that looks too good to be true, it probably is, and to let me know, and I'll search it up in the brokerage marks. And no matter how many times I say the word, no, this has an offer night, ignore the price, it's like moths to a flame. It just, they can't help themselves but really feel like, hey, that's the price. So how do you see that kind of, are you seeing it change now in the condo market? Are people kind of just saying like, hey, look, we're not going to try to, I don't know, insult the intelligence of today's buyer. Let's just price it where we think it's going to land.
Yeah, mostly because offer nights don't work anymore. Like if they were still working, that we would be doing them. But when you're sitting with 8 months of inventory, like offer nights typically work when there's under 2 months of inventory because there's not a lot to choose from. There's quite a few buyers, and that's why they'd be willing to play that game. But it is interesting that you say that no matter what you say, people will still send them to you and say, "You think I can get this for this price?"
Hmm.
So in a weird way, it's actually proving that the strategy is working to get people's attention, and they might still make the offer at the marketing price, which they'll never get the house, but it might, now they're in multiples with someone else who's at a higher price,
Yeah.
and it could actually get the seller the outcome they're looking for by using this strategy. So it's like, it's one of these things that I've always thought, even in the hot market, people complain about offer dates. Like, this isn't fair. Just price it at what you actually want. It's like, yeah, but you're literally telling the sellers with your actions that they should be doing this.
Hmm.
So in today's market with condos, buyers for condos are telling sellers with their actions that like offer dates aren't working, or because there's so much to choose from for condos. Yeah, okay, I know you have an offer date and the last one sold for 550 and you're at 499, but my offer is 485. Take it or leave it.
Right.
So I guess there's more of an actual potential to get it for the real price in the condo market than there is for the homes that are going, like, how low are they going for homes? 200 lower? 100 lower?
So I'll see typically about a 10%
Okay.
kind of difference on the value versus the price, and that seems to be where people, but the thing is, in my market, I don't know if it's the same in yours, but people will just leave it there. Like, the offer night will fail and they'll just leave the price there and like just kind of let the,
So literally maybe my biggest pet peeve.
yeah,
It's so annoying.
2 months on the market, it's still at their offer date
They
price.
should be embarrassed that in the brokerage remarks it says offers reviewed on this date. It's 2 months later. It still says like what, and then you call and you're like, hey, like yeah, like they want this much more. It's like, well, Like, what are you doing? I don't get it.
I think that there's going to be some. I think we're already seeing it, some kind of exodus, because a lot of people don't know that also our realtor fees, like our licensing fees, just went up dramatically
Mm,
in the last, what was it, year? In the
yep.
last year. And because of the market downturn, I think we're going to see a lot of people exiting the market or just very quietly kind of just like stashing their license and not really practicing so much anymore. So we're going to get less of like the, Uncle Bob's going to sell my listing kind of thing for me and not charge me very much. I think we're going to see a lot less of that. But in your market in particular, it takes such a level of expertise to sell a condo when they all feel so similar.
Yeah.
You're looking around at all the listings and the layouts, like with the kind of like almost like kitchen, hallway,
It's the
balcony.
bowling alley.
And then, yeah, the bowling alley, and then the bedroom off to the side with the bathroom beside it, and like it's just, they're all so similar. The little nuances between them start to matter so much, So it requires such a level of expertise that that you're really like you're able to spot the nuances and get things sold.
But that's the only way you can do it in this market. You have to understand why things are selling and why things are not selling, and what is the trend that we're currently seeing. And that could be between size of unit, bedroom type, that kind of stuff. Like with buyers, like, if we're representing a buyer right now for a condo, because we've got quite a few active buyers buying condos, it's like if you looked at, recording this, there's probably, and there might be 7,000 condos for sale in Toronto right now.
7,000.
Yeah, probably. Yes, I guarantee when the numbers come out at the end of this month, there's 7,000 active condo listings in the 416 area code. So it's like, if you're a buyer of those 7,000, if you then break it down to the area you want, your price point, all that kind of stuff, there's still a lot. And then
And in C1, C8, there's probably what, like 2,700, 2,800,
probably,
something like that.
yeah, I think last month CO1 was at 1,600 active listings, and CO8 was like over 1,000 as well. So yeah, yeah,
It's crazy.
in that. So it's like, if you know there's that much on the buying side, it's almost like turning on Netflix and like scrolling for 45 minutes and not picking a movie because you're like, I have too many options. It's like, I don't even know what to pick, right? It's like the opposite side of things. So we're just trying to dial it down, and we've used the out of 10 rule forever, and it's just like, it's always something. It's like, go in and rank it at a 10, but you can't choose 7 because 7 is average, 6 or below, move on. So it's like, and now you used to do that when you see the properties. Now we're doing that before we even book showings.
Hmm.
And what we'll do with the active buyers is we'll say, okay, you've told me you want to buy this. This is your budget. Before I send you what's on the market now, because I could send you hundreds and you would just, I'm going to handpick listings to send you of ones that I like in buildings that are vacant or owner occupied, that I think have good floor plans, or that we know the developer, or we've had people that have lived there before. But before I even do that, I'm also going to send you in the last 90 days, based on your price point, area, criteria, I'm going to send you the list of properties that have actually sold. Let's start there. Go through those, go through each one of them, and come back to me and say, which ones in that list would you rank a 9 out of 10 or 10 out of 10?
Hmm.
Because you see the price it sold for. So like, that's the best data we have. It's a sold firm transaction. Tell me which ones you would have bought if that was available now and you were ready.
And are there any, when you're working with buyers, especially downtown, are there any buildings where they might send you a listing, be like, hey, what about this? And you're like, do not touch that building with a 60-foot pole?
It was probably 10.
What are they?
I mean, 36 Lisgar has gotten better, but still, I wouldn't put my money in there. There's the obvious ones like
Ice.
the ICE condos. There's a few older ones that just have some like ongoing lawsuit things that like they might have figured it out. So I'm not gonna name them because it might have been figured out by now. I mean, there's some in City Place that I don't love. There's some in City Place I actually really like, but there's some of the ones in the middle there, the 2115 Ice Boat, 151 Dan Lucky, like, don't love those condos. I'm trying to think. Those are like the big ones. There's some on Joe Schuster that have not the greatest reputation. So like if you can get it for the right price, okay. If you're gonna rent there, whatever. But if you're gonna invest your money into it, and I know like people say your primary residence is an investment, it's still your money. Putting down a lot of money on something, you should put it into something that you feel good about.
What would you say, um, I don't know, just to have a little fun, what was like the biggest deal you ever did?
Biggest deal I ever did was 3.8.
Where?
It was actually a house in Lawrence Park. Yeah.
That's cool.
Yeah.
When was that?
That was 2 months into the pandemic.
Wow.
Yeah.
Seller or buyer?
Seller. Yeah.
That's awesome.
Yeah, we've done lots of stuff around 3, and we've had stuff listed for close to 4, but then they've come down in price, obviously. But yeah, most of our transactions like are sub $1 million, I would say. For condos for sure. Houses are all over $1 million, but usually sub 2. I would say is kind of our core client demographic right now.
That's where I really like those areas you mentioned, Leaside, the beaches, things like that, where you can find like properties that are, and it's so amazing when you see them and they're like over 100 years old, but people are just chomping at the bit to get at them.
So that's kind of my point. Is like, what have we built in the GTA in the last 15 years? What's the inventory we've been building?
We haven't built any freehold.
That's what I'm saying.
Yeah.
So we've built condos. We are currently building purpose-built rentals. They're coming.
Well, they have to come because it doesn't
not
make sense to make them condos.
Yeah, right, exactly. So they're just shifting. So if I'm looking long term and I'm asking myself, what property type continues to have demand, we're not building any more of, it's freehold in Toronto.
Right.
Yeah, price points obviously very important. Price point and location are very important. And once you've kind of, figured that out, like, where I live, I'm not going to say where I live, but in my pocket, homes are selling in a week still in today's market. There's some selling for $3 million. My home's not worth that, but like there's one just across the street from me that went for 3.2 in 7 days and was listed at 2.9. Like, so if you look at these family-friendly, good school zone, prime neighborhoods in Toronto, I'm not betting against them. If I would want to have my money in there versus other assets, if we're talking real estate for the next 10, 15 years.
Yeah, like if we are talking real estate, a lot of people are starting to veer away from it.
Yep.
As if there's like a huge range of things to invest in Canada, because Canada is not really open for business on a lot of stuff.
Yeah, I don't know. And then the tax implications on everything.
That's another thing. Like in the city of Toronto in particular, I own an investment property in it's kind of like North York-ish. I bought it in 2021. I got an awesome fixed rate on it. I still have it. I'm terrified for when my renewal comes up in a year from now, but got a COVID rate and have great tenants in there. Since I bought it in 2021, it's like Olivia Chow just took my property taxes and strapped it to a rocket and sent it into the goddamn stratosphere. My property taxes have gone up, I think, 37%, something like that, since I bought it. And I'm just kind of getting to this point now where I'm like, is the municipality helping or are they hurting? And every time I go back to this, I'm like, especially with new construction, they're just killing the market. It's like 30-40% of buying a new home in Toronto is just development charges and fees being paid by the city and paid to the city. I mean, and you got guys out there like Brad Bradford, who are actually kind of ringing the bell and sounding the alarm, and it feels like nobody's freaking listening.
Well, they're not.
Yeah, like how do you see that playing out? Do you think it's only going to get worse, or do you think the city's finally going to ease up on that?
Well, they're going to have to if they want anything to be built. Like it's not, the math is not that hard to figure out. We already know past 2027, we have nothing coming. So like right now, we work in extremes in Toronto. For whatever reason, we work in extremes, and we have the most amount of new condos being delivered this year and next year that we've ever had. And then past that, we have essentially like there's like 3,000 units being delivered in 2027 across the GTA, and most of them are in the 905. Like there's nothing, right? So And they're not launching this year. No one's buying it. So if they don't launch this year, they're not being built at all. Like it's going to take 5 years from launch of project to completion, right?
Right. So we went from all cranes in the sky to no cranes in the sky.
Yeah, we work in extremes. So right now, we can look at the developer and we can just say like, "Well, just lower your prices."
No, they can't.
I wish it was that simple,
Yeah.
right? I wish like I don't even blame them as much as like other people involved here because when you look at it's like at some point, I think Vaughan was the first to do it with bringing the development fees down. Mississauga has been at least talking about it. If Toronto doesn't do something, nothing will be built. And then eventually, and I get it, condos suck right now. There's lots of pain out there. But 28, 29,
Right.
you don't think we're gonna have an issue again?
Yeah. And it'll.
And we're gonna point back and be like, we told you.
Mhm.
Like, I get it's gonna take some time to get there.
And then it'll slingshot in the market. Well, it seems like all we have in the Toronto area are peaks and valleys.
Mhm.
And then anywhere else you look, like we have a lot of friends who are colleagues in the Maritimes
Yep.
or in the prairie provinces, and they're doing great
Mhm.
because their markets are rolling hills rather than peaks and valleys. And it seems to make a lot more sense in the long run when you have a lot more predictability in the market rather than frenzy
Yeah.
purchasing or blood in the streets and people are like getting killed. So it doesn't seem to kind of have an end. It's almost like we're just going to slingshot the back on the other side of the spectrum.
We just keep going back and forth. I was just in North Bay. Have you ever been in North Bay? It's a
No.
4-hour drive past Muskoka. Beautiful drive, actually. And I went there for a speaking engagement. And I was chatting with the realtors in that market. Obviously, much smaller market, totally different thing. And yeah, Toronto buyers bid up their prices for a period of time too, and now they're gone. But a lot of the listings are Toronto agents still trying to sell the stuff they help people buy.
Oh no.
But anyways, it was really interesting because I was going there telling them what we're experiencing right now, and they're like, "Oh, like we don't have enough listings. Like there's nothing. Like all I want is listings. Anything under it's again, you can buy a house for 500 grand, so it's a different conversation. But they're like homes under 500 or waterfront are selling in a week. Like we have an inventory issue.
Jesus.
So it's interesting. Like yes, they're 4 hours away. Yes, it's a totally different market. And pre-pandemic, the prices were probably 250 and now they're 450. So they still come up a lot, right?
Hmm.
But like what they're like market by market, and this is I've actually been thinking about this a lot. When I report on the data, when the Toronto Real Estate Board reports on the data, when you do a market update video, what we are telling people, even if it's micro market, it's saying, okay, you own a house in this area and it's this property type. This was the average sale price. You're not buying a collection of all the homes in your neighborhood. You're buying one home. So it's like you're essentially, when you're buying a house or a condo, you're buying one stock. It's one company, it's one stock. So like all these big numbers, not that they're irrelevant. Of course it matters for tracking trends, but like the only thing that matters is that in your very small area, what's selling, what's not selling, how much inventory is there, how are you going to position yourself? If you're a buyer, what's the long-term outlook for that area? Like all these big grand numbers don't matter. I'm not buying the city of Toronto today. I'm buying one property type in a specific area, and that's what I need to know if I'm making that decision. So I feel like people are getting so caught up in like the headlines are good, I get it. But even when the TREB data comes out, and this is what like I've been trying to explain this to people, the city of Toronto, so this is interesting, of the 27,000 active listings from the last report that came out, 10,000 of them were actually located in Toronto. So way less than half of the Toronto Real Estate Board's numbers were actually homes located in Toronto. And then 70% of them were just condos anyways, right? If you really like want to dig into it. But there's just so much information. It's great that people are doing things like this and we're talking about it. But if I'm a buyer or seller, like all this is good, but it's analysis paralysis. Focus in on what you want to buy or what you're selling and look at those specific numbers. The rest is meaningless.
And that's kind of what I like about your YouTube channel. Whoever's listening to this, if you haven't checked Tom out on YouTube, check him out. It's you're you don't play into like the doom porn.
No.
You don't play into, the hype train either. You're just very like it's not even like you're trying to be balanced in your approach. You're saying this is not my opinion. This is what the data indicates.
Yep.
And that's what I really like about your channel, and it's grown quickly.
Mm.
How do you think that that's changed your perspective on things, um, with regard to just consistently posting on YouTube? Like, do you think that there is that something like audience capture that you find is almost kind of like the ring of power where you kind of like want it, but you shouldn't?
Or you mean like doing things that, just get views?
Yeah.
Yeah, of course. That's dopamine, right? We made that decision a long time ago, though, that my whole thought was always like, I am not a YouTuber. I'm a business owner, and YouTube is one of many tools that I use to meet new people by trying to educate them on the thing in which I believe I'm the expert in. Like, that's kind of the idea. So, like, it'd be very easy. Like, I could write out my next 10 videos and have my channel grow by 10,000 subscribers, like, if I wanted to, but I'm just not interested in that.
Mm-hmm.
And I feel like I found a nice middle ground where, like, the videos get decent views, and I'm being realistic and not tricking people and just trying to come at it from like here's what the data is showing. But again, data is always the past. Even if it's up to date, it's up to yesterday. And then over here is what I'm currently seeing with the active buyers and sellers I'm working with that could show you what's coming next. Like, I don't know. I'm just a small percentage of the overall market, but that's kind of how I've tried to focus on it. But yeah, YouTube's an interesting place.
It's a super interesting place. Do you look at the comments, or do you like post and ghost?
Oh no, I look at the comments for sure.
Yeah.
Yeah.
Yes.
Yeah. I mean, like, it is what it is, but you know, the loudest person in the room isn't always the person you need to give all your attention to. I've also like kind of learned that over the years. And most people that are in agreement with what you do will consume it and move on with their day. And they don't comment, they don't like, they just get the information and then they move on. It's usually the ones that disagree that are the most vocal. So I think that's just like something to keep in mind.
Those people are not going to become your clients anyways.
Probably not. And like I understand why people are mad about real estate prices. Like, I get it. It sucks.
Well, you were there once too.
Yeah, of course. I get that if you, in a perfect world, yes, prices are tied to household income. I get it. But there's so many other factors like interest rates, access to money, family money. Like, there's immigration, form, like there's all these things that are actually the real market versus like this nice fair way that we would like it to actually happen. So no, I like comment section is very entertaining to me. And as long as it's not like personal attacks, cool.
I mean, I kind of started to post and ghost
Yeah.
because I was like, man, well, actually, I've kind of started to look a bit, because what I was noticing is, yeah, there'd always be, the loud person who is really happy to shit on me for whatever it was.
But whoever that person is, there's probably 10 or 15 of them that just go to all the channels and post the same stuff.
And what I've realized is, when I was looking at that and I was trying to put it in perspective for myself, to not be like, oh man, I should just stop what I'm doing, because obviously that's like, you can get discouraged really easily.
Yep.
I started measuring if I was going to get a shitty comment. I did this like 2 years ago. This is actually when I started posting and ghosting, is if I got a really mean person in the comments, what was the ratio between them and subscribers
Right.
on the video?
Yeah.
And I was like, dude, if this is a 2 or 3 to 1, let's go. Bring on the bad comments. I'm ready for them. Like, I'm happy with that ratio. And then the ratio gets better and better over time as well. So I've kind of, it's so easy to get stuck on the negative of it. But
And you know what? Like, some of it's actually really funny, and like they really are just trying to wind people up, and like it's. I see the humor in it as well.
have you ever had almost a kind of like this like urge to like actually invite them on the podcast and be like, you know what, man, you're so tough behind a keyboard? Like,
There was one person that it's not that they were rude, but they just disagreed. And we've asked that we probably offered 3 people over the years.
Really?
So here's our email. Email us. We'll get you on the show. You have to use your face and your name,
No way.
but then they don't respond.
Right. Right.
So,
They're
I
just a
mean,
keyboard warrior.
yeah, and that's okay. Like, I don't know. I don't really think much of it because I don't mind. I think it's just part of the whole thing. When we
Right.
talk about real estate, if we talked about technology or anything else and had people that watched us, there would be the same amount of people complain. Like,
Right. There's always going to be haters.
whatever.
Are you on X?
No, spend zero time there.
Because that seems to be, from what I hear, I'm not on it either, the most toxic of all environments. That's like
I spent like 3 months there a few years ago and then quickly realized like, this is a waste of my time. It feeds you only negativity. And that, again, going back to like, I'm a business owner, seeing the people that had the biggest followings on X are not the people that have the market share in my market.
right. So there seems
I
to
have
be
just, if it was to become quasi famous in our little world, then like, sure, I could go on tomorrow and know what to post to get traction. But I don't want that.
That's cool though, because there's like you're really kind of outlining that there is a big disconnect between people who are just posting on YouTube and who are creators versus people who are actually selling real estate and are in the market and are actually doing business. And there are very few who are doing both really well. You're one of the few. And I feel like there's kind of this illusion
Mm,
around what's happening because of the doom porn. And it's not that the market's doing terribly, and it's not in some areas, and it's not that the market's doing great in a lot of areas either, but it doesn't really pay to be balanced in a way. And then there are some people like you who are giving a more holistic perspective that are doing well, but like you're like, oh, it's almost like a fringe of like
yeah.
truth.
I It's funny though, because if you're truthful and somewhat optimistic about things, because that's just my personality, people think you're just pumping things, right?
Right.
Where it's like the people that are just putting out the negative stuff, some of it's such crap and has no validity, and I know they're not even involved in the market at all, but people are like, "Yeah." So it's like, just because you want it to be true doesn't mean it is. But there's nuance, and I'm not gonna go back and forth in the comments with people about that stuff. Like, I'll move on with my day. Like, it doesn't really matter to me. So,
What do you think the biggest blind spot is for either people in the industry or buyers and sellers who are operating out there, in order to get things connecting, get them from A to B, but there's kind of this blind spot there.
on the consumer side,
Yeah. Yeah, well, I mean, for agents as well, if they're listening and not doing something, you know, they're missing the beat.
yeah, I think like in any market, um, this is like a Dean Jackson thing, but there's the before, the during, and the after. And that's how he kind of looks at it. So it's like the before is like the research phase when people are learning about the market, talking to their friends, reaching out to a realtor and starting the process. That then becomes the during. And the during is like, y- I want to save you from a bad experience. Like, that's kind of how we've always looked at it, which is like Taylor Hack got this in my head years ago, which is like, I want to become good at marketing and make sure people know that we do what we do because I want to save them from having a bad experience with somebody else. Like, that's kind of the thought. So that's the during. And then the after, which is where most of the realtors fail, which we know is like, you've done your job, you've got them to closing, it has closed, the transaction is done, you have been paid, and now they are a past client, but then you never call them for 10 years.
Mm.
So I'd say on the real estate side, most people are like decent at the during, but they're not good at creating the opportunity, and they're not good at like then nurturing the opportunity once it's become the closed transaction. And then for one of the things we used to do, which we should get back to, is for like active clients, like, how do you actually know who's a good person to work with? Like, how do you find some? There's people with followings online. There's your friend that used this person. There's the family person that you've always had. At least for sellers, what we used to do is we say, here's our active. We don't even. It's not even the ones that have sold. So here's our active group of properties we have for sale. If you'd like to talk to any of our active clients that we haven't even gotten the job done for yet, about their experience, I'm happy to make that connection.
Oh, that's interesting. So
Because you can cherry pick your favorite clients and if someone you just sold something for.
right.
But it's like, well, okay, I haven't quite got the job done yet, but I've been in communication. They're in our process. Why don't you talk to them about what it's been like working with me? Am I responsive? Am I, all the things that you'd want as a client.
That's interesting because you're not kind of saying, okay, get a testimonial from someone who sold at the peak and is super
Right.
happy with the price that you got them because you got them, 1,200 a square foot, and
No.
it's it's you're saying no, no. Even right now in this market, they're trying to sell. They're having a rough time, like but like ask them how we're doing for them.
Yeah. I think that's probably a real representation of the person. And if you ask someone if you can talk to those people and they're like hesitant about it, there's probably like a reason they're hesitant about it.
Oh, that's interesting. So in all of that, I guess there's a big difference between the market and your performance as a realtor.
Mhm.
You could have a listing that's sitting, like I have listings right now that are sitting,
Same.
but my clients are very happy with me, but it's just the market kind of shot the bed.
Yeah, and that's when you're having those delicate conversations on a weekly basis about what do we have to do? Is everything selling around us and there's an obvious problem, or is nothing selling and we got to find how to be the one that actually sells? But most, if I think about like my day to day right now, other than speaking with new buyers and sellers and my team's showing all the properties to all of our buyers, I'm pretty much just looking at my CRM, my active listings, and thinking like, who do I have to call today or send an update to let them know where things are going? Because if that's kind of where you've lost it, like if your client's the one bugging you, being like, hey, what's up?
That's not good.
It's not good. And because as the realtor, sometimes you're nervous just to give them an update because you have nothing to tell them.
So you're reminding me of something Mark Ferris said,
Yeah.
and I don't know if you remember this, but this was like at a chairman's years ago, right? Like back when he was still in
Mhm.
Royal LePage, and he said that one of his big lessons in training his brokerage was no update is still an update. Like you should be calling,
Right.
even if you're saying there is no update.
Yeah.
I'm just reaching out,
Yeah.
just to let you know. That's kind of leads me to a really good question is like, what's one of the best lessons that you ever learned and from who?
I don't know if it's from one specific person, and this does kind of go back to something you've heard me say like a million times, and I'm going to rephrase it, but like it doesn't matter how good you are at what you do if nobody knows who you are. So that's been very clear to me over the years and meeting with people that are struggling in this industry that are good at the action of the during and the client process and staying in touch and negotiating and all that, but not good at creating opportunity for themselves.
Mm.
So I'd say that's the biggest, like, for me, I know this is not like, this is very business focused conversation now, but like, if you believe you're good at what you do, you are potentially doing your clients a disservice by not taking marketing seriously.
Well, I feel like a lot of people, at least in our industry and other industries too, are happy to take advertising seriously, but not marketing.
Yeah, it's different.
Right.
Yeah.
So explain to people what's the difference between advertising and marketing and why like you seem very much more focused on marketing than advertising to me anyway.
I don't do much practical advertising, right? We did some stuff with some I thought was a good fit. There was this guy that was doing Leafs highlights, and we would sponsor the videos. It was like a perfect fit. So I did a little bit of that. But for the most part, it's like advertising is like they see you, they know your name, but they're not actually sure if you're good at what you do.
Right. So a billboard,
A,
for
bi-
example.
a billboard, a bus bench, a radio ad. Marketing is like if you have all the for sale signs in their neighborhood, that's an ad and marketing, but it's a very strong one. It's like, oh, this is the person that I see all the sold signs with. They're obviously good at what they do, right? Like, so that's very clear. Now, if you're involved in the condo world like I am, where I can't put a for sale sign on every condo listing, it's like, okay, I'm kind of like, I've got all these listings, but people don't know unless they're searching online. And does a buyer actually care who a property is listed with? Like, are they looking at the who it's listed with?
No, most of the time they don't even know.
Why would they care, right?
Mm.
So then it's like, okay, they can know who you are, but then for me, marketing is, do they know that you're good at what you do? And that's where it's the visual stuff. It's the explaining what's happening in the market. It's being up to date with the numbers and the stats, and that's where it's the YouTube stuff would come into play. Like, I think the YouTube stuff for me is mostly marketing.
That's where I'm finding a lot of authority building happening, where in that space you're able to really communicate the quality of your intellect,
Yep.
rather than just your name and your face, because a name and a face could be anything, and then that person walks through your door and it turns out like you hate them, you don't like the cut of their jib, they just rub you the wrong way.
And things like this, like longer form conversations, you can tell if someone knows what they're talking about or not. Because if you actually have to break it down and explain it, like viral short form clips, it's like,
Right, if someone's dancing and pointing in the corners, it's not really gonna do it for you when, you're going into a situation where you're really nervous, you and your wife are fighting, and,
right.
you're about to need this guy to, like, do brain surgery to get your place sold, and you wanna make sure that they're really good at what they do.
My most successful videos are probably my most boring videos.
What do you mean by that?
So it's not success based on views. It's success based on people that have reached out and said, I watched this and I need you to help me do this or this. So like we have 45-minute, 30-minute, I'm working on another one right now where I like to think of it as like a master class. Here's a topic that I'm an expert in. I'm going to walk you through it step by step by step with good editing, and it's going to be all put together in a digestible way that, yes, it is boring to watch a 45-minute video on how to buy your first condo in Toronto, unless you're someone looking to do that.
Right.
So it's like, I know it will do bad on views initially. It will build over time, but that's like a pillar video. It's like an anchor video on my channel of like, I can take another news headline and break it down and make some jokes about how dumb this blog TO article was, and that will get me lots of views. Or I can do this kind of step-by-step thing where it's like, and even those step-by-step videos, you don't get as much of the negative comments in there because they're not watching those videos.
Right, because they're not looking for the apocalyptic narrative
Yeah.
in those videos. They're finding other videos which have the thumbnail of apocalypse
Right.
to click on for that.
So that to me is those are the best videos in terms of actually for my business.
Interesting.
People reaching out. It's not even close.
And what about the podcast?
Podcast has been great. I still can't believe how many people listen to us every week.
How many people do?
I mean, on YouTube now, we're almost getting 10,000 views every Sunday. And then the audio platform, another 2,000 downloads per episode. Like,
Wow.
it's amazing. And again, part of it is sometimes we'll record an episode. I'm like, that was awesome. And then it doesn't perform very well. And then me and Steve were joking because we had one last week where we like recorded and afterwards we're like, oh, that was not good. Crushed. Like, did so well. So it goes back to marketing. We know there's a formula on the podcast. We have to have a good title for the show, and it has to have a good thumbnail. Those two things are actually more important than what we end up talking about, as sad as that is to say.
So should I be posting this with a thumbnail of like Condo Crash Explained? In fact, that's going to be the title.
Yeah. Or I can think of a good title for you, actually.
Yeah.
I'll send you a title after. But yeah, right? It's like, even looking at, I watched this, I've seen the ones you've done. There's some that like pure value is so high and don't have too many views.
Richard Robbins was here 2 weeks ago.
So
Exactly that.
but like rich in our world, that's a huge interview to get for a real estate agent.
Totally.
For the rest of the world, they just want to know about why pre-sales aren't closing.
It's so interesting that you say that, because that's exactly so. I thought, man, Rich is going to come in. This is going to be great. He's, a rock star CEO
Yep.
of like a huge company. And oh man, this is going to be awesome. I was so excited. and it got like a couple hundred views.
Yep.
And not that many watch time hours. And then I had a couple weeks before that, Mark Morris come
He's
in,
great though.
and the guy was being apocalyptic to the max, and it crushed. And
Everything he does crushes because he knows how to hit on the points. He's really good at it.
yeah, but it wasn't balanced, I didn't find, and he was, like, really going hard on the apocalyptic nature of it, and I was like and almost, like, while it was happening, I was kinda like, "I think this will crush, but I'm almost not sure." Because I'm almost like, I don't really know, you know? And it did really well, and then I was talking to, one of my agents, and we were talking about this, and that's exactly what they said. They were like, "If your YouTube channel didn't do well with Richard, but did well with Mark Morris, it's actually, I think, a good sign because it means that you don't have a lot of agents that are subscribed to you and it's more consumers."
True.
And I never really thought about it that way. So I'm kind of not sure as to like what it's what it's like for a consumer when I'm sitting here and vice versa as a consumer watching other videos, because
Right.
I'm not just an agent, I'm also a consumer myself.
Right.
What what it is that I really want in a
Mhm.
way. So I don't know what to give. It's a disconnect between like the person playing the instrument versus the listener.
I mean, the way that we've kind of looked at it is you have to play the game. So my main channel and our podcast, my thumbnails and titles will be relatively a little bit scary. Have to.
Right, clickbait a
That
bit just to get them in.
we were joking with a client. I sold their 1+10 condo. We got 3 offers on it. And afterwards he was like, "Hey, that was like not so bad. I thought the condo market sucked. Right. We got 3 offers and I guess if you price your condo well, it sells." And I was like, "Yeah, if I made that the title of my YouTube video, no one click on it."
Right, right.
We were like joking about it. So it's like it's always been the same. It's just news. It's news. It's media. It's like I get it. It's entertainment. It's more fun to watch things. It's fun to watch people fall off their bikes. It's funny, right?
Right.
Well, maybe that's a weird example, but like, you know what I mean,
No,
right? Like,
no, I hear you.
if there's a video of someone crashing really hard on their bike and they're okay and it's funny versus a video of just a guy biking and not falling, which one's going to get more views? Like, that's just human nature, right?
Well,
But it is tough. You got to play the game.
you gotta play the game, but also give the truth in a a palatable way, I guess,
Yes.
you know?
And explain it in a way that people can understand, not using real estate lingo and talking about it in a way that, like, assuming that someone for the first time has opened their computer and looked something up and they found your video and they can understand what you're talking about. I find that's helpful.
Well,
Simplifying it.
I think that you do. I think that you speak in a vernacular that everybody can understand, and that's why I was so excited to have you on because I was like, "Oh, man, like, this is, a huge thing because 'cause I've been watching you on YouTube for, like, years, and, you for those watching, this is the guy who inspired me to even, like, start my channel. It's still, like, a small one. We just got monetized, though, which was great.
Nice. Nice.
And I think that that was a huge personal, like, value point to me
Yep.
that you gave indirectly because COVID hit. You just were like, "You know what? I'm gonna put out a video program to help guys and gals in the industry get used to shooting videos and editing them and putting them out there." And I was sitting at home, couldn't go out, and I was like, "You know what? I'm gonna do this."
Yeah.
And it was your course that specifically helped me. So if you're a realtor and you're listening to this right now in particular, Tom has an amazing video course that will teach you A to Z, everything you need to know about how to get started and start a channel that can ultimately help you market in a meaningful way and get you business. So, uh, anyways, that was just my huge point of gratitude I wanted to convey because
Thanks, man.
it really has changed my business in a huge way between that and Bomb Bomb and all the other stuff that I remember watching you like on Richard Robbins stage years ago and thinking to myself like that guy's got it like that looks really super calculated, smart,
Hmm.
and also authentic. I really want to do what that guy's doing. So I've been super excited to have you on, and I really want to thank you. Where can people find you?
YouTube's probably the best. Just type in my name. You'll find the main channel and the podcast. Whether you like 10-minute videos or hour-long conversations like this, we'll get you on the show soon for sure. And
Awesome, man.
yeah, man, that would be the best place. Thank you for saying that. I think you're one of the few that actually did it, right? Like you look back at that list of 70 people in that initial course that we did, how many of them are still actively doing things? Probably 2, you being one of them.
Between you and Steve also helped me, but like he helped me in a very like I'm such a high green type personality that I would just like text like a very technical thing like,
Yeah.
hey, what do you use for that? That's it. You
Yeah.
know? So but both of you guys have been hugely instrumental and helped me a lot. So I really point of gratitude on that. And everybody check out Tom's story. You know, the guy, his marketing speaks for itself. And yeah, man, by the way, love the new branding. Looks great.
Thank you.
Thanks for coming, man.
Yeah, man. Thanks for having me.